Welcome back, everyone, to another market closing live stream. We got a little bit of negativity from the Dallas Fed president, Mr. Kaplan, leading to a little bit of additional pain in some parts of the market. But it's not just Mr. Kaplan. There are other parts of the market that just aren't so happy about our biggest earnings week in the quarter. The biggest earnings week in the quarter is over now. It happened. It's done. And what did we learn in the earnings week? Well, we learned that our favorite companies, consumer discretionaries and techs, blew it out of the park with earnings, almost across the board, beating expectations. Yet the market's like, okay, all right, you passed that test, but what about the next 3 months? Well, I mean, the next 3 months, we're not going to grow as much as, let's sell everything. We're like in a skitsy market, and it is very bizarre, but also I'm sure it drives some folks absolutely nuts. And this is something where you really want to double down on your reason for being in the market. Are you in the market with the majority of your portfolio? I know some of us have speculative positions in our portfolio. We want to swing trade. We want to momentum trade with speculative portions. Some of us swing in momentum everything, which is fine, but you got to ask yourself what your strategy is. If that's your strategy, that's fine. But I would say the majority of us watching probably have a long portfolio, whether that's 50% or 80% or 90%. You got to ask yourself for the longs. For your longs are, in 10 years, when you look back at March through September of 2021, the crappiest 6 months after the great pandemic, or whatever we'll end up calling it, the pandemic, who cares, whatever. Will we look back and go, man, those prices were cheap back then? Or in 10 years, are we going to look back and go, man, we got ripped off after COVID? Oh, man. I'm inclined to think that we're going to go, dang, those are some cheap prices. So, as much as you can try to, I like to say, screw your head on right in that sense, I think it's wise. It's wise to see, what kind of decisions are you making for the long run here. Let's go ahead and jump into this. Yes, bipolar market, exactly. You know what we should do? We should run a quick poll. Why don't we do that really quick? We haven't done this in a bit. So let's run a quick poll. Curious to hear what your thoughts are on this. All right, so here we go. So let's do a poll, and let's do how much of your portfolio is long versus speculation slash momentum slash swing trading. Okay, so is long 5-year horizon plus. So, yeah, I think this makes sense. This makes sense, right? How much of your portfolio is long? How much of we should do this. How much of your stock slash investment, that could be both. How much of your stock slash investment portfolio is long, 5-year horizon plus, versus speculation, momentum, swing trading? Okay, good. So let's do 90% long, 10% trade, 50-50. Let's do, maybe do like a 70% long, 25% trade, 50-50, and mostly trade swing, mostly trade slash swing. I think that's a good question, right? Something like that. Yeah, okay. I think this covers this. What we could do here is, I think that's fair. And you know what we'll do? Ish. There we go. We'll put an ish here. Ish. that way it's 50% ish. We'll put the ishes in, so it's a little, in case you're like 20, 26, 74, it still applies, right? Okay, mostly so. Okay, so we'll come back to this. We'll see what y'all think. So at Real Meat Kevin on Twitter. Oh, look at this. Somebody just tweeted, ARK bought Tesla today, 78,000 shares. Oh, that was yesterday. Good. Yesterday was like 669. See, I mean, that's brilliant. Buying the dip, sticking to it. It's very smart, but it's also rebalancing the portfolio. And this is something you got to be very, very careful of when you're constantly tracking ARK Invest's moves. A lot of them are just rebalancing moves to keep their portfolio in line with their, okay, we got to have 8% Tesla. We got to have 7% this. We got to have 4% this, blah, 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 blah. You got to have those different levels. And as the market moves, you got to adjust them. It's kind of like going into your refinance or your M1 Finance account every day and clicking rebalance. Like every day, rebalance, rebalance, rebalance. Some days you're going to sell Tesla. Doesn't mean you don't like Tesla anymore. It just means you're rebalancing. Some days you're going to add Tesla. It just means you're rebalancing. So, yeah, I mean, these are important things to keep in mind. All right, so what do we actually got in the sticks? We got Microvision down to $15 again. A far cry from that $27 a share that we saw. Kevin, check out AHT, Ashford Hospitality Trust. They own 103 high-quality hotels, and demand is picking up considerably. I'm nervous about the hotel industry still, because that's an industry where the margins are so tight. You got to be like 90+% occupied usually. And I just have a hard time seeing us return to those occupancy levels for a while. Airbnb, on the other hand, that's freaking killing it right now because people don't want to be around other people, apparently. I guess in some sense makes sense, if you're not vaccinated. But anyway, Microvision, 15.72% towards the downside. Twitter, 14.25, which I think I remember we ran a poll and it was like 35% of y'all don't want to get vaccinated, don't plan to get vaccinated. So I mean, keep in mind, that's a big portion. Mind Medicine, 9.8% to the downside here. Yeah, so Mind Medicine, ever since they canceled that interview and rescheduled, which we still don't have a rescheduled date, it's kind of like it's been slowing down a little bit. This is going to be the, is this today, or I think that's yesterday's candle. No, okay, that is today's candle. Oh, okay, so we this was our slowdown here, right? Our slowing trend. And we've been bobbing around negative and slightly green for the last few days. Let me go to the non-average so I can actually see here. Yeah, there we go. See, we had a red day, tiny green day, red day, red day. They shouldn't have rescheduled the interview. All right, anyway, back to the average candlesticks. Average candlesticks, in case you're wondering, they're a little bit easier for trend purposes. So perfect week for covered calls. Yeah, it was. You did not get at all risk or any risk of your calls getting exercised. Desktop Metals down 6.3%. SunPower's down 5.6. MP Materials just been getting decimated too. I mean, going from the mid 30s and mid 40s, just straight down here. A pretty rough ride here for MP Materials, and I don't know that it deserves this sort of decline here. I mean, we've inclined through about Feb 4, and then we've kind of been on this downtrend here. There's going to be a point where if this keeps falling, I was thinking about it under 30. I don't know. Lately, I've been a little bit more tight and a little more like, I'm going to wait for those perfect opportunities to really buy the dip if I can. So I'm definitely keeping an eye on this one. Like Etsy, I don't like buying this one over 200, but really for me to go into Etsy heavier, because I do have such a sizable position, I'd really have to see us back off this long-term like consolidation that we've had over here, which has been going on for about 3 months now. We've been bobbing around 200, like 190 to 220. That's been sort of the range of bobbing here. I think we'd really have to fall to some lower levels at Etsy for me to jump up and down and dive in some more, maybe that under 170. I don't know if we'll break under that, but those sorts of ranges. Not sure we'll see that. But anyway, Nano Dimension, bobbing around that $7 range here. Tried to jump again. Did have a little brief moment there of trying to jump again, but just couldn't keep it up. Fuel Cell 4.3, Fisker's down 4.2. I feel like most of the sticks we've been reading the last few months have been red. It's been nuts, and it makes sense. I mean, everything's kind of been trending down. Matterport at 12.5. Shopify, wow, Shopify kicked frickin' butt the other day with a 10% gain in one day. Let me go quickly here to the normalized candles here. So normalized candles, we had our 10% gain followed by 2 red days. This is the second red day in a row here now. We're really trending down now on Shopify. Yeah, Endeavor taking off, especially after. Is it Endeavor Group Holdings? I think it is. Yeah, look at that, up 11% here. Really taking off after even the suggestion of, well, not the suggestion, but the reality of Elon Musk joining the board, which is very powerful. So what else do we have here? DoorDash, Etsy, Teradyne. There's a space, it's not SpaceX, Arc Space Fund, ArcX. It's almost like they're going for the SpaceX, except it's ArcX. I don't know why I just made that connection. That's probably like a total duh. But anyway, Churchill Capital coming off its highs back down to that 21 range, waiting for those cars to actually get produced. Very Good Foods down 3.3. Blink Charging's down. Wayfair down. Wayfair being down under 300 is something we haven't seen for a bit. Wayfair has been really stable above 300 for a while. So let's take a look here. Yeah, so 300. Where did we draw our line? We drew our line at 317, but 300 is approximately where we are here. We haven't really seen 300 since the February dips. Oh man, in February dips. We got some nice dips in February. See here, we were over 300 again. Yeah. All right, Vuzi's down 3.3, Pins down a bit more, Enphase sub 140. Remember the last time we were at the 130s? It was so juicy. This gets under the 135 range. I will go shopping again. Lemon, although I did already nibble a little bit. So without going into margin, yeah. Canoe, ARC, ARC has also, of course, been following kind of this trend down. Let's look at the ARCs for a moment here. So here's ARC FinTech. Zoom in a little bit of a better view on this here. There we go. So ARC FinTech down to what levels are we at here? Somewhere around January levels. Really maddening kind of swings here. Let's look at ARC K. ARC K down about 1% in that 120 range, really dropping off those highs. Also back to approximately those early January levels. Plug Power sitting at $27. That thing went down as low as 25 for a moment. Peloton's down a little bit, though. Website growth still happening, which is crazy to see the uptrend in Peloton website growth. It's not like crazy of an uptrend, but it's certainly up. So what else do we have? FRX is pretty much flat. Interview Sunday with FRX and Ross Gerber. That should be really fun. So stay tuned. That'll be Sunday morning. I think it's 9 a.m. Pacific. Doing an interview there with FRX and Ross. Oh wow! And you spent $40 to say check out Ashford Hospitality Trust. My goodness! And I'll put them on here. I didn't even realize the amount. Oh yeah, look at that. I mean, it's up 11% today. And what do we got here? Geez, it's a $2.60. It has let's see. Okay, that's November. Well, this is an interesting road it's been on. Let's see. Let's go to week here for a moment. Yeah, kind of a solid downtrend here. I mean, even before the pandemic, I don't know if these folks have been doing splits. But I mean, there have to have been splits in this because this is let's look at that really quick. Ashford Hospitality. Oh yeah, we'll have to look at our poll too. Ashford Hospitality stock splits. Yeah, 2020 announced a 10-1 split. Reverse split. Oh, that's a reverse split. Wow. So they've done the okay, yeah, this would take some more time to really analyze and see what the heck's going on over here. Wow, okay, yeah, look at this. So we got 16.4% of you voting are mostly swing slash put this together. Mostly swing slash trading. And which is kind of along expectations that most of you are focusing on the longs. If we added the top two together, we'd be 46.2 and 22.5, puts us around almost 2/3 of you. Actually, no, that is more than 2/3. Yeah, 2/3 of you are mostly long. So if we combine those into mostly long, we would be 2/3 mostly long, 15% 50-50, and then really a little bit of a minority of you here on only mostly swing here. All right, what else do we have? Let's look at we want to look at cryptos here for a moment, because we do have some winners here in the day. We got Ethereum's almost back up to 2,800, been bobbing around here for a bit. We got Dogecoin running a little bit at 32.6, and Bitcoin at 57,000. Nice move to the upside. I mean, we're up $10,000 a coin since Sunday, and it really is showing that it's been holding true with the move in 10-year treasuries. And that's something that when I did my video on Sunday, people were like, yeah, whatever. I honestly think when I make a crypto video, there's a portion of people who just go straight to the comments and don't even watch the videos, because some of the comments have nothing to do with the treasury relationship. But the treasury relationship is fascinating to me. 1.63. Let's go ahead and throw in BTC. Let's see if we see that. It's usually a little harder to see with the exception of year to date. There we go. Year to date shows this trend nicely. So here was our Coinbase push on BTC. Here you can see year to date, though, Bitcoin, that blue line, really almost perfectly matching the trend. Not perfectly matching the line, but perfectly matching the trend of treasury yields go up, Bitcoin goes up. Treasury yields go down, Bitcoin trends down, especially if you take out the Coinbase junk here. This would have probably been a little bit more of a downtrend leapfrog if it weren't for that Coinbase pump. And now we've got treasury yields going up. Now Bitcoin's going up. Kind of incredible. So incredible. All right. Let's see here. That's actually a good question. Let's do a follow-up. So we're going to reply to this with a follow-up tweet, okay? So what size is your portfolio? Answers are anonymous. What size is your portfolio? This is a good follow-up. So let's do under $5,000, under $50,000, under $250,000, or more than $250,000. 200 under, yeah, more than / equal to. No, that's just too complicated. Whatever. More than 250. There we go. Fine. If you're at 250, you could just vote with the 250 crowd, okay? You know, we should bump this. This should be 15K. There we go. I think that's better. Under 50, you know, and let's make this 75. There we go. Okay. I think that's going to be better, a poll result. Or a little bit more educational. Okay. So if you've gone to @RealMeKevin on Twitter and you voted in this 2,000 votes here, we got to get some more votes. Got to get some more votes on this, especially if you're a trader. If you're a trader, you better show up and represent. But all of you should. So, but if you're trading with $500, please don't put under 250,000. You know, please vote appropriately. So we'll see how this goes. The votes take a minute to show up. So, oh man, kill me. Hey, look at that. Tesla's like trying. It's been trying to follow our W. Remember when we drew the W and it really started working on the W? We go to the day. It's not so great. Yeah, no. It behaved for a while. The first 3 days, it did really well on that W. But, you know, for us to make this W work, we really have to, we just have to zoom in. Here we go. And we'll zoom in a little bit. And you know what? We'll go to the week. There we go. See, look, the W is still working. No, it's been a mess at Tesla. A lot of FUD out in the marketplace. Volatility index up today. How close are we to closing bell? Oh, we still got 6 minutes to go. Losing track of time here. Marathon, Endeavor. Look at that. Voyager Digital up 11% today. Got Naked Brand up 12. Oh my gosh, BTX is up 41% again. Jeez, that's funny. You've got some really incredible swings on the stock. I mean, it was up 70%, then it was down like 30%. Now it's up 40%. It's crazy. Why in the world does Amazon fall? I know. That's what I'm saying. This market it's unfreaking predictable. Does margin count? Yeah. I mean, I didn't ask what percentage of your portfolio is debt. Just ask what kind of portfolio you're working with. Is bag holding and long the same thing? No, it's not necessarily the same thing, because there are a lot of traders who bag hold day trade positions, who bag hold swing trade positions. Generally, I don't associate bag holding with longs, because and it depends on what your strategy is when you bought the stock. Now, you can lie to yourself and say, oh, yeah, I bought it as a day trade, but then it became a long. that's just deceiving yourself, right? Then you make it harder for you to evaluate your own performance. This is why the day trades that we've done, we have a chart in the Stocks and Psychology of Money course where I was day trading with $30,000. We're up around $22,000 in just day trade gains. And those are specifically positions that I bought thinking, okay, these are my opinion of good day trades. And like EHang and some of the others that we swung, Ocugen, they're Microvision. Actually, I don't think Microvision is in that. That was more of a long swing, although I did make a lot of money on that. And so was my Doge. That was good. But those were a little longer swings. No, those day trades or shorter term swings where I went in with the intention of those being short swings, those are all on the chart, including the losers, where I wrote, this is a trade. And that was, I mean, the benefit of me publishing what my trades are, because it's all documented. And so that way the losers are on there, the winners are on there. And that's important. You should do that for yourself too. But to me, like if I buy Tesla at 800 and buy it at 820, and then I buy it at 700 and I buy it at 550, I don't consider it bag holding. I consider that DCA. But you generally don't dollar cost average on your trades. You can. What was it? One of the ones we bought, I think it was what was it? We have it on here. I can't remember. One of the ones we bought, I dollar cost average traded it intraday to get a lower basis and then get out, which was great. The strategy worked, and I was able to get out without losing money on it, which was awesome because the position really turned against us after we opened it. So, I mean, there are tricks to get out of bags when you're trading. But yeah, trading is very different, in my opinion, from bag holding. So, but I think that's a good clarification. Can Tesla have a real future in China? Yes. The government will make sure China EV brand wins. Yeah, I mean, this is a fear that people have that I think is misplaced, at least for the next 10 years. For the next 10 years, China needs Tesla. China needs a front runner. The Chinese consumers want Teslas. We have not seen pure, in my opinion, pure discrimination against Tesla. If anything, we've seen pure accommodation. Now, have there been issues with some PR lately, or negotiations over camera data and things like that? Sure, but that's par for the course when you're in a different country. So and then the argument here, eventually China will create propaganda to get Tesla out. Maybe, but then, at that point, China might also matter less to Tesla. We get an India factory, maybe we'll get an Aussie factory, Taiwan factories, European factories. See, right now, the China facilities are being used to supply Europe with Teslas because we don't have a Gigafactory in Europe yet, right? And personally, I think European sales will explode when there is a Euro factory, the Berlin factory, because I believe, and this is just a potentially call it a superstition, or maybe not a superstition. No, what is it called when you have a perceived belief in something, but it's not necessarily true? A bias? I don't know. I believe that Europeans will buy more Teslas when they're made in Europe because there's a lot of cultural pride in Europe over auto manufacturing. So we'll see. But no, look, is it possible in the future Tesla will get pushed out of China? Or discouraged in China? Yes, but I think that's a 2030 plus event. So anyway, a gut feeling, a hunch, a premonition. Fine, those things. Thank you. What is it? Premonition and predilection? Predilection is the way you think. Premonition is the way you act. Is that it? So is the way I think a predilection? Intuition. Okay, I have a little. Is that intuitive? Sure. Whatever. We got the closing bell to do now. Thank you for the suggestions.
The session. The S&P 500 down 0.75%, and the Nasdaq down 0.9%. The Russell 2000 is the biggest decliner today, down 1.25%. The best performing sectors: utilities and real estate, with energy and tech at the bottom.
Oh, that's probably too. Was that too loud?
2.8%, but still up 3.5% for the week as a whole. We do have oil down 2.4%, gold and silver down slightly. The VIX is up for about 6% today, 18.7, and a 10-year around 163. At the close Morgan, we are down 0.8% on the S&P, but flat for the week as a whole and up 5% for the month of April.
Let's get the music.
Welcome to the Closing Bell. I'm Morgan Brennan in for Sarah Eisen along with Wilfred Frost, also Mike Santoli, CNBC senior markets commentator. As you just heard Wilf say, we did...
Where's Sarah?
Lower for the major averages as stocks sell right now. The Dow is down 0.5%, 181 points, though...
It's not the same.
Of April. Similar story for the S&P as well. The S&P closing down about 0.7% or 30 points. 41.81 is your level there. However, it just finished its best monthly gain since November. The Nasdaq as well, finishing the day lower, down 119 points.
It's just not the same.
But also higher on the month of April. I'd also just point out the Dow Transports, which are finishing their 13th straight week of gains. We haven't seen a run like that for the transports in more than a century. Meantime, Twitter shares tanking on weak user growth and guidance. Coming up, venture capitalist Jeremy Liu on the outlook for social media stocks as the economy continues to reopen. Plus, shares of Columbia Sportswear under pressure today despite an earnings beat. Coming up, the company's CEO is going to break down those results and give us his take on the state of the consumer. Meantime, though, Barbara Duran from BD8 Capital Partners is still with us, and Liz Young, SoFi.
All right, we're gonna back off here. Let's jump in. I want to look at the Twitter poll again because we've got some more reactions here. So we've got the longs still at that's actually perfectly 70% now. That's so with 3,000, we still need more votes, folks. If you have not gone on to Twitter yet, pop on right now. Right now, get off that treadmill and get on this right now. At Real Me Kevin on Twitter, we need the votes. We got 70% for mostly long, 15% for mostly trade swing, and some of you had 50-50 on the portfolio. Now, in terms of size of portfolio, 37% of you at under 15K, another 30% under $75,000, 16% under $250,000. And 17% of you voting over $250,000 in the portfolio. So see that clear distinction here of really, what do we got here? That's almost 70% of voters trading with or investing with less than $75,000 in their portfolio now. Very cool. You know, another question. Okay, let's do one more. Okay, all right, one more. This is the last one, but this is a good one. How long have you been investing, in the stock market? All right. Well, here we go. Watch this. Since 2020, since Jan 1, 2021. Sorry. I'm not going to say sorry. But yeah, that's probably the correct thing to say. Since the pandemic, last 5 years. 5+ years. All right. Okay. All right. Let's give that a shot. That'll be interesting. How long have you been investing? Again, I feel very sorry for anyone from Jan 1, 2021. You've probably been getting beamed, but don't feel bad about yourself. Okay. This is probably honestly the best education. Best education you could have in the stock market is getting destroyed in the stock market when you start investing. and then come out of it by holding through it and turning those reds green. Not paper handing like the Weenie Babies. All right, the Weenie Baby shorts of the world. All right, so how do we do on the close here? So Micro's trying to recover a little bit in the afters here, 1.31% in the after, but still lost 15.2 on the day. Right there with Twitter falling right back. Look at that sharp decline there to 15%. Ouch, ouch, ouch. Then we've got Mind Medicine at 9.49. We've got towards the downside here. China hasn't pushed CAT out of China. In fact, CAT continues to gain market share. It will be the same for Tesla. Joseph, that's a good $10 follow-up there comparing Tesla to Caterpillar's dominance in the industrials to obviously consumer vehicles. That's a very, very interesting counter argument there. I like that. Thank you. It's a good one. We did, by the way, a bit of a NEO analysis this morning in the Stocks and Psychology Money Group. Actually, remember all of the programs, the real estate ones, the property management, the YouTube, the sales, the ones for agents, all of the programs come with access to the group live stream. And we kind of just divide up the group live stream into the different segments, deal analysis, Q&A, real estate, and so on. YouTube analysis is fun. But yeah, NIO was one of the ones we were diving into this morning. Really exciting. So what else do we have? SunPower. And remember to use that coupon code before Cinco de Mayo. All right. SOS is at 36, up 0.36% in the afters here. SOS, another big momentum trade that has really been trending to the downside. It's broken all levels of support that we had previously drawn for it. And kind of coming straight down here. Nano Dimension down 4.8, trying to recover in the afters. Etsy just under 200 for a close here. Looking for some more movers in the afters. BNGO in that $6 range here, 6.45 after hours. Matterport trying to recover a little bit. I don't hold any sends. That's another one that was a big momentum play that I watched. And we even did some analysis on sends. Whoops, I guess I've even put a Fibonacci on this one. I overlaid a couple fibs, and this is what it looks like when you zoom out. It looks horrible. So let me just clear what we got here, because I can't see anything. There we go. So okay. I mean, that's kind of the downtrend that we've been seeing. It's sort of been continuing. It's consolidation. You're seeing that volatility decline. Remember, folks, this is a lesson. Okay, this is a very, very, very good lesson right here. When stocks decline, they de-risk. So when you get a fall in the price like you had here, they de-risk. What happens when a stock de-risks? It tends to trade in a more narrow range. See, from here, it still fell down to here, but now we're trading in these more narrow, you're kind of squeezing into these more narrow paths until you have a breakout catalyst to the upside. Good things to know. So, yeah, let's see here. All right. Just looking at some of the questions. All right. So, they say people are not. Okay. Yeah, a lot of you talking your portfolios here. Very interesting. You got, lots of different conversation here. Very cool. Somebody says Bitcoin's falling. I don't imagine it could be falling much. I mean, it's very volatile when you look at the minute chart. 56.6. I mean, you're right. It is falling. In fairness, this is very true. If we go to like the 1 hour, yeah, the 1 hour looks a lot cleaner. Nice gain here to finish out the week, especially with the data sets coming out that we've had. Thanks, Topher Can saying get the course. It's great. I appreciate the shout outs. That's cool. All right, let's keep going here. We've got lots of opportunity when implied volatility falls. You know what you could do is you could even go into like let's see here. Let's do Tesla, and I'm not sure how to do it. I used to be able to do this. Implied volatility, intraday volatility graph. There was a way to see this of stocks. So like a history, like an IV history. IV history. I have to Google that one. I'll try to Google that, but there's a way you can get that. Hold on a sec.
As opposed to lots of give and take between sectors and stocks. So as correlations go up, it usually means more of a macro-driven market. It means people are focused on bigger picture stuff, whether it's Fed or credit conditions, and that often just means that the market's clenching ahead of something. But I would say you definitely have to be on guard if it really does sustainably seem to turn higher above 20.
Yeah, Liz, I just want to go back to this inflation topic again, because I know you mentioned that could potentially be something that's on the horizon in 2022. Does that mean that you don't see it as an issue this year, despite the fact that we're hearing so many comments about not only higher costs, but higher prices being pushed out to end markets by companies in this earnings season?
Yeah, I don't think that it's going to be a huge problem this year because there's also been so many signals that we won't know if it's transient or not. And I think we will get higher inflation readings before the end of the year, but there's still the expectation that they're going to self-correct at some point. We won't know if they're going to be sticky. We won't know if they're going to persist until 2022. And then it's more a matter of, are they persistent enough that the Fed has to move? And one thing that's interesting, though, is if you look at CPI numbers, between 1% and 3%, the market still tends to move up. So we have some room here. And if we're looking at a Fed average target of 2%, we've got even more room. So I don't think 2021 is the inflation problem. I think 2022 is more of the problem.
Liz and Barb, thanks so much for joining us. Good to see you.
Thank you.
It was a tough day for Twitter, the stock tumbling after disappointing user growth and guidance. Up next, venture capitalist Jeremy Liu will join us. He was an early investor in Snap. He knows a lot about this space. We will discuss that and the SPAC trend, whether things are overvalued or not. Plus, Mike Santoli looks at how last month's huge jump in personal income and savings could hit the economy. We're back in 90 seconds.
So, thanks, Eric, for the Eric Kramer. Thanks for the shout out there. Are you related to Jim Cramer? By the stock course. So take a look at this. This is the IV chart. Oops. This is the IV chart here for Tesla since 2019. And so what you're looking at is the blue line here. So let me see if I can highlight the blue line. Yeah, there we go. So the blue line shows you this implied volatility. And so I bought my options right here on 420. And then, of course, after earnings, you have an implied volatility drop, which doesn't help that Tesla's price also went down after that. But yeah, it's very common to see an IV drop after earnings. Obviously, it's one thing if the price goes up a lot, and then that's nice. But obviously, Tesla sold down afterwards. But generally, you want to try to avoid the big spikes when the implied volatility. It's a general rule of thumb. You want to avoid buying options when things are super high. Usually, it's not a for sure rule of thumb. It depends on the individual stock and how it performs and that. But yeah, implied volatility is certainly coming down after this, and this being the biggest earnings week too, right? I mean, this is a huge earnings week. Like, let's do implied volatility for Apple is generally a lot lower. Hive G. There we go. Graph volatility. Thank you, Mikey. Yeah, even Apple coming down. But let's go back to 2019 here. So I just want to encompass the pandemic here. So see, but then on the flip side, the implied vol, and this is why you have to be careful. Implied volatility went mega high in March, but that's because prices were falling so crazy low, right? So those are things you want to be careful of too. So it really does depend on timing. It's not a perfect estimate to say, oh, only buy your options when IV is low. Sometimes what you want is IV to be high. So it just depends. But anyway, yeah, sort of this continued downtrend in volatility is something that we were expecting, and we're really going to have to probably wait until September, October to really see a boost in those options prices. Is my expectation. All right, so let's get on back to the sticks here. Let's see what we got at the sticks. So over here, we're just going to sort by after hours. Wow, after hours, the BTX one's running again up 19%. I don't know anything about that one. Ashford running up 4% afterwards here. Let's go to the stocks we usually keep on the list here. Playboy DocuSign up slightly. And then you've got... yeah, Virgin down about 1.35. Yeah. Okay. I don't think full self-driving is coming until probably July. Like Independence Day is what they should go for. Let's see. Yeah, let's listen for a moment here.
The trend that we've seen a lot of startups, which is more in my world, moving towards in the media business. So subscriptions, direct payments, whether it's to influencers or, to companies, because people just seem to be more willing to pay for content. And so you see that with The Athletic, Substack, Patreon, Twitch, Fourth Wall, the rise of merch as a business model for creators. It's all supporting that. It's all in that direction.
Yeah, Jeremy, it's Morgan. I mean, you sort of just hit on my question to you, which was going to be whether it's Twitter or it's whether some of the other more established social media names that are already out there in the marketplace. I mean, it wasn't that long ago. I feel like it was just a year or two ago that we were talking about the fact that there was no competition and that new companies were going to have to focus on other areas to really make a dent. And yet here we are having this conversation this afternoon about all this new generation, if you will, of social companies that do seem to be starting to pull some eyeballs and some attention away from the likes of Twitter and Facebook, et cetera.
Yeah, this people have been saying social is dead for a really long time, and yet there seem to constantly be these new social things popping up. And people said social is dead, and then TikTok came along, and people said social is dead, and then now we've seen Clubhouse starting to take a lot of.
All right, let's pull back here. I'm gonna go jump onto Fox, and I do want to look at that Twitter result on on how long people have been using their portfolios. One sec here.
I think the GOP needs to really press ahead with, the view that if you tax investment and capital formation, you are in fact taxing the middle class and damaging their wages. That's point number one. And I think the Republican Party has to really talk about job creation or the loss of job creation. Right now,
we're going to pull back off the opinions here from Mr. Kudlow. Take a look at the results here. How long have you been investing in the stock market since Jan 1? 23%, a fourth of y'all voting on Twitter here. Since the pandemic, if we combine since the pandemic in Jan and Jan 2021, I mean, we're over 61% here. Last 5 years makes up the next 23% here. Somewhere around what that is, put us around 84%. And then 5 years plus only 16%. It's just sort of an interesting breakdown here. It seems like it's that same 16%. I wouldn't be surprised that that's also over here at the more than 250. Not necessarily, but that wouldn't be a surprise. All right, let's give Bloomberg TV a shot. So what do we got over here? The labor shortages. Let's hear it.
Economic.
Our Wall Street Week, and we heard about this from Treasury Secretary Larry Summers. Take a listen to what he had to say.
You can see it, and maybe this is the best measure, in the fact that workers are quitting at rates they usually quit at during booms, which suggests that this isn't just a sectoral thing, but is a pretty pervasive phenomenon in the economy.
Yeah, pervasive. Let's stick with some of the labor shortages, Caroline, and talk about some of the world that I was just mentioning within the world of Manhattan restaurants and trying to struggling to pick up staff, of course, as it readies for its comeback. And many employees, well, they might not be in a hurry to come back. Maybe they've left. Let's do it with our Bloomberg food editor, Kate Crater. Kate, what are some of the anecdotal stories you're hearing about restaurants so desperate not to miss out on that revenue, but also not wanting to risk the reputation of opening, and then they don't have the staff to support the customers?
It is such a tricky time for restaurants right now because there's all this opportunity. Rents are low, maybe historically low right now. And so there's all this opportunity for restaurateurs to like scoop up places. At the same time, though, there's...
Sorry, is this too loud? My bad.
Is across many industries, but restaurants, especially for New York City, when everything shut down last year, so many people left. And unemployment benefits continue to be very attractive for them. They don't have to work. Restaurant work is hard if you've ever done it. It's not, there are more appealing jobs out there for a lot of people. And then there are markets like the Hamptons that seem like they're going to be big money this summer. So they're like, why will I, stay and work in an empty Midtown when I can go to the Hamptons and make a lot of money?
Interesting. So it's not, have also a lot of the staff sort of gone to the other areas? I mean, this migration south, as many have said, when rents were so high, have people just decided they don't want to come back to the big city?
That's unfortunately, I'm a real New Yorker, so I hate to have to admit it. But yeah, it's not always easy to live in New York, and prices are high, and the jobs weren't there last year. And so a lot of people left, and now they don't have a lot of incentive to come back. And certainly there's a lot of reports of people going to the Hamptons. At the same time, we are working on a story about how the Hamptons is reporting a shortage in labor. So look out for that story.
I think you rightly point out some of the unemployment benefits. We push forward to Jobs Day on Friday. As we think about this recovery, you do hear anecdotally from some small businesses that it is hard to compete.
Right. Next Friday, we get our new unemployment report.
what are you hearing about? Are you making more money with some of those benefits? What is the incentive then to really get back to work?
It's hard. It's really hard to make a case to go back to work when benefits are good. People are making hundreds of dollars a week with unemployment. And then other industries, Amazon has been peeling off workers from the restaurant business. And we're also hearing anecdotally about the cannabis industry, the green economy, becoming an attractive place for restaurant workers. If you're a chef and you can make edibles, there's a hospitality aspect to it too. So it's, I have to say restaurants are getting squeezed from a lot of different corners in terms of labor.
Kate, I want to end on a high note, though, because it was just yesterday. New York City will reopen 100% on July 1st. Where are you most excited about seeing at full capacity, at going and sitting at the favorite bar stool that you always had?
Carolyn, I love that question. And you know what? Actually, Cuomo just announced that starting next week.
I'm going to pull off this question here. What's the word on SEC leadership leading after a few days? Yeah, there was an SEC enforcement director who basically bailed after a few days. I don't know. I think the job probably sucks, honestly. Well, I mean, I hate to say it, but like and sorry if anybody from the SEC is watching. I just imagine. I mean, it's in some sense, it's kind of like I feel like being a cop without a gun. Like everybody hates you. Nobody wants to work with you. Like nobody's happy to be getting a phone call from the SEC, right? And like I don't feel that way. Like I mean I don't want to bag on the SEC. I have no beef with the SEC. I just imagine they do a lot of enforcement. It's a lot of negativity. You know, people don't call them up going, "Hey, thanks for what you do for our country." You don't see that. They deal with all that negativity. I don't know. I think that's got to be a very, very stressful job.
That's housing. Look at that, V. Our next guest says the U.S. economy is on the up and up, but he warns about the future. I want to just say editorially, when I was out there talking about V-shaped recovery, starting last spring or summer, the national political press pounded me into the ground. And then we got Joe Livornia, who came on board, and Joe went out with the media and made the same pitch, the V-shaped recovery, backing it up with numbers, constantly prepping the president. And President,
all right, we're gonna pull off Larry and his V. I don't know what Larry's obsession is with V's. I don't know. Something's going on there. All right, so after hours, really nothing's moving. Everything's pretty stable with the exception of BTX. Everything is pretty dang stable. I do want to look at the cryptos though. Let's take a peek at. Let's see, Bitcoin back at 57,000, so just bumped up again. Ethereum 2768 and Doge 33. Let's go. 77 more cents to go, and then we don't have to shave. All right, so who says I'm gonna stop streaming? Why would I stop streaming? I like it. I don't have earnings today, so it's a little bit of a slow day. Yeah, let's go ahead and pull up. I'm going to pull up the Bloomberg terminal. Let's go to top news. Look at the 10-year treasury again. So look at the 10-year treasury yield again. Still at 1.62. Still at slightly higher level there. Bitcoin riding the line pretty well as usual. Let's go to top news here. Let's see what we got. TOP. Top news. We saw this on was it CNBC or on Bloomberg? I don't remember where we watched this, but we just watched Larry Summers talk. Pentagon cancels Trump border wall project under Biden's order. All right. So copper surge towards a record high is hitting the Chinese industry. Yeah. Okay, cool. So what else? Do we have anything else? I don't know. It's a little slow. It's a little slow. It's so slow. CNBC's on commercial again. Closing bell exclusive. What you got? Who's the exclusive with? Better be somebody fun.
We've seen this great outdoor boom.
I swear.
In large part thanks to COVID. And we've seen it across a number of retailers, a number of stocks. It's played out as well. Yours is no exception. Given the results you did just report, I guess, how much do you expect that strength and that focus by consumers to continue?
All right. Honestly, I'm not too jumping up and down. If you want to watch it, you could go to CNBC.com. Somebody says, I owe Kevin a ton of money. His courses should cost more. Oh, well, thanks for saying that. You don't owe me an extra dime. that is something though that people keep telling me is once people are in, it's like relative to courses that cost thousands of dollars. You know, these programs for like $400 or whatever, if you use that coupon code to the moon, it's like a bargain. So I appreciate you all saying that. Thank you for the continued support. I know it's been the last couple months overall for many people in the market have been a little rough, but I'm very confident we'll get through this. This is and it makes sense, right? I mean, think about the uncertainty. I had an analogy this morning about it kind of feels like there's like a fire in a movie theater and everybody's panicking. I'm not going to go through the whole analogy again, but there's so much uncertainty, like, oh, are we going to be able to get out? What's beyond the door? Is the Fed going to come in and save us? Are they going to screw us? You know, there's so much uncertainty right now. And to me, so much of it is nonsense. I mean, the economy is doing great in so many parts of the market. And we'll get the unemployment numbers next week. Sure, we'll have a few more months of high inflation numbers coming in, but we saw this coming. This is why I paid down my margin substantially in February. I sold a bunch of stocks in February. I've been making videos about it on the channel talking about, look, once these inflation numbers come in high, you're going to see insane volatility. Now, I didn't think we would see like an extended kind of crash in certain stocks like SPACs and high PEs, which we have seen. So it's exceeded my expectations. But I mean, to me, it's happening just the way we would have expected it to. It's just a little more amplified. And so that also gives me confidence that this fall and winter will react the way we kind of anticipate it will. It doesn't seem like, I mean, if this good news keeps coming in, at some point, the shorts end after these shorter term trades do their job at beating up the market and giving us buying opportunities. So, I don't know. Some more thoughts there. So, all right. Yeah. All right. So, all right. Cool. Yeah, this is honestly like my belief is if I could just plow money into the stock market this year during this pain over the next 6 months, and then I'm not allowed to invest again for 2 years after that, I'll be golden. It's just a thought that I have, and I really believe that. I will keep my options and stocks position in line with what I've talked about, though. Ideally, 25% options and 75% like the actual shares. So anyway, thank you very much for being here, folks. I really appreciate you. The comment section is okay. Yeah, appreciate y'all. Thank you for being here. Well, have a wonderful weekend. We won't have live streams this weekend for the stock market, but we will have a few live streams tomorrow. We're going to have one on mortgage forbearance. Sunday, we're going to have one on FRX with Ross Gerber. It's going to be really fun. We'll see about rescheduling Mind Medicine as well, and we'll see with some more videos over the weekend. Stay tuned, too. I don't know. It looks like something might have to happen with the face over here. Anyway, appreciate y'all. See ya. Check out that coupon code. Bye.